All right, welcome back to Trader Sage. We're going to continue on where we left off yesterday. Obviously, today's a new day. We did discuss, I think, what we looked at. We were on a 1 minute towards the end of the video. Kind of saying, hey, if price breaks this level here, then I think we were like on a 1 minute chart because there was nothing else there. I think price just had finished running the previous week's high. And we were looking for a break in structure. It didn't come. Something like that along those lines. I think it's way back here, actually. Way back here. We're looking for price to break this swing low. Let's see. We didn't break that swing low until way over here. So I said, hey, if price wanted to continue going down, it needed to break this low, or either this one of the two. And it didn't do that. It actually pushed higher into this bearish fair value gap, weekly bearish fair value gap. Only thing changed here is that I kind of like eyeballed the quadrants here, broke it into quarters, and this is the bottom quarter of that bearish fair value gap, and you can see price after it rated the Asia high. That's the blue line, the Asia high. And let's take this back off. Took that off, and here's the Asia low. So you can see, and this is, we can take this off and redraw it. So that was a level. I think this is a 15-minute inverted fair value gap at this point. This level here. So this is your turtle soup entry. Here's your lower sell, and we have other opportunities here. Obviously, this is about the midpoint of this imbalance here. Let's just prove it to some degree. Do that across to the right. Do we have to do all that? Yeah, that's cool. All right, so the midway point, you can see price reacted there, reacted to the first quarter bounce, drop, reacted to the halfway, the consequent encroachment of this level, rallied, it didn't rally, so order block, drop lower, below equilibrium into this imbalance. 1, 2, 3, got a reaction here, and then dropped again. All right, so one thing I'm focusing on is consolidations. They are relevant to market maker buy and sell models, of course. Anyway, that's just me. Let's back up a lot. All right, so this was the previous week's draw on liquidity, and kind of said like, hey, either the previous week's high or this bearish weekly fair value gap. That's what we identified yesterday. That's a potential draw on liquidity. And today, Thursday, in terms of time and price, today is Thursday. It has a high probability of being a reversal Thursday. So we kind of pointed that out. Time and price is key. This looked like that doesn't belong on this time frame. This is like a 15-minute level at the least. Let's just get that off of here. All right, so price traded into the bottom quadrant of this weekly imbalance and then pull back into this bullish 4-hour fair value gap. And we got a reaction here. We got price taking out sell side here. We have a reaction here. Price is currently holding below the consequent encroachment of this bullish fair value gap. So we want to see, right? So you're going to have like an immediate rebalancing of this price range with this bounce here. It literally rebalance this level here, trading into that. So what does that mean, right? You know, that's, you know, whatever. So you want to look at the down close candles. It depends what's your setup, right? Like what's your PD array? You look at this as an order block. It's cute. You can look at this as a balanced price range as well. This right here. So if we do see like some upward action, then this is a little suspect. This is a little suspect. Also to kind of factor in, you think like this swing low to this swing high, and then currently we in a discount, then that's cool. We actually holding above this propulsion block that we indicated. This is what helped push price higher. We kind of like right back into it, but we holding below this level here. So we'll see, because it also took out sell side. So if it goes take out this external range, then maybe it does an internal range here, or pulls back down here into this level, taking out obviously these swing lows and trading into this imbalance. And so that's the 4-hour chart. And one reason again why we point out things on the 4-hour chart is because ICT says treat the 4-hour and the 60-minute as you would your daily chart, and use a 5-minute for your market structure, and a whole new world will open up to you. Try it and see. And he also says the 15-minute chart removes the blur. And my take on that is that wherever you identify the trade setup at, if it's clear to you, then that's where you need to be. If it's not clear, then the lowest you should go, the lowest I'm willing to go, speak about myself, right? Lowest I'm willing to go is on the 15-minute chart as a high time frame chart, aka for a scalper identity. So that's where I'm at with it. See here, and that's that. All right, so boom, we're going to focus on today. So 4-hour, so we went weekly, 4-hour, and we're going to go to the 15-minute time frame. I'm going to get rid of this. Show you here how we identified as BPR, this balanced price range, yesterday on the previous video, and you can kind of see price still utilize this balanced price range again. You can say, hey, it actually used this order block, or you can say, hey, use this bullish fair value gap. It's up to you. Don't really matter, right? To me. Anyway, this is how I got the equilibrium, the balance price range here. It's this previous day's low to the London high, and this was the midpoint. So that's how I got that. This right here, kind of looked at this right here, this area here. Looked at this area right here and identified another balanced price range here. And I just kind of shot it across. Is it relevant? Maybe not, right? So don't really need it. It was something I was looking at, but you can still see prices like using it. But I'm gonna delete it because the chart is kind of crowded. I'm gonna leave that here because you want to see what price does in this area here. So we have a run up, we have a break in structure here, and we have a pullback. You can maybe take out this swing low, maybe hold above this down close candle, at least the midpoint, which would be pretty much the high on this inverted fair value gap. So where are we? What? No. So we have a short, we have a consolidation, we have a pullback, taking out sell side. We have here, this is consolidation, but broke the consolidation, we're at the high. So we have a run on stops. We have the market structure shift here, and I'm counting that as a market structure shift because it ran this high in this imbalances here. So that absolute, no, this is more like an ideal. So we have that balanced price range here. That kind of send price higher, take out this level. So we're gonna see what price does. Anyway, this is the completion of a market maker sell model on a 5-minute chart. You can see that now clearly taking out this swing low and then pulling back inside of this 4-hour fair value gap. So so weekly what do you want to concentrate on? You can talk about this entry here for the lowest sell. You can actually count this as a lowest sell here. This one here is nice, got consolidation below, you can say below consequent encroachment of this 4-hour inverted fair value gap, or you have it with this tiny little volume imbalance. You can see the wick stabbing through, but the bodies are telling the story. Wicks do the damage and the bodies tell the story, right? So consolidating and holding below this level or this consequent encroachment is this 4-hour inverted fair value gap. So that's good money. Also, you can see here it traded back into this bearish fair value gap here and then prepared to drop, right? So run on stops, run like it waited to come run the Asia high, ran the London high. This is still the London session, the intraday high at this point. Ran it here, but it took out the Asia high and traded into the bottom quadrant of the weekly bearish fair value gap. So yeah, that's all good. So that was your turtle soup. You have a low risk buy. I think I pointed out 2 of those. There's this one here. All right, you got to run on stops. These 2 swing highs. Then you have violation of this. Let's just draw it out. You have this volume imbalance and this tiny little, it was a bullish fair value gap, but now it's an inverted fair value gap. That's that, right? So the question is, what is the closing price of this candle and the closing in the high of this down close candle? Identical. So that's your entry. Institutional order flow entry drill here. Kind of left that gap, this bearish fair value gap, left it open ever so slightly. So that's a solid entry. The institutional order flow entry drill, IOFED entry. That's a model. Institutional order flow entry drill. And oh yeah, that's your entry model. Bam. So that's for me, that's the first low risk sell. If you didn't like that, then this could have been one, right? Because when you think about the ATM model, which is primarily focused on the 1-hour chart, the ATM ICT ATM model, it's the down close candle right before the run on stops. So it broke below this level. There's also a fair value gap here, but that's not the focus. It's the down close candle that is the focus. So that's one entry. Bam, right here. You missed that one. You have this down close candle. Let's just right. So let's see again. Let's see what this closing price is and the high here. And this is a balanced price range too, because you have this overlap and have this. Technically, this was a gap. This ran up here, open here, ran up here, then drop. All right, so that closing price here and high of this candle. Identical again. So this your two entries. All right, so you have an institutional order flow entry drill here, and you have the mitigation block, or you don't know the name, then whatever. So that's two low risk entries there. One here, one there. You actually have another one here on this volume imbalance. That's if you saw it. If you didn't see it, then move on. So this one here, retrace into this volume imbalance and then dropped. Yeah, I'm not gonna. Anyway, that's 3 entries, all before the London session kill zone is over. And after the kill zone, after London session, still consolidating, and then a continuation pattern right into here. So that would have been an entry here. He just had to stomach all of this. Not a kill zone. He had wanted to pass on it. Up to you. And twice here, but again, it's a continuation of all of this. Oh, that was nice. A nice trade setup. And then you have that consolidation. You have price dropping at 8:30 news. This kind of did a consolidation, ran the high here and then dropped. Have more news here, pending home sales. Dropped again. And so yeah, target would be this consolidation here, or this 4-hour bullish fair value gap, or this inverted fair value gap, or this 15-minute balanced price range. That's very what you see, right? But either way, when thinking about the range, and this is equilibrium, and you're saying, hey, I'm going to, like, this was a reason, a good enough reason perhaps to exit the trade, especially like right here, right? Because it traded into this fair value gap, bounce here, right? But one concept that we dealing with in terms of ICT, if the market cycles, right, where you have a consolidation, this is technically a bear flag, right? A bear flag, if you trade those, if you're aware of what a bear flag is, right? But anyway, when you have a consolidation, like price should continue and with the order flow here. So you have a consolidation here. So if you do see like a pullback, you have to question that price. Hey, price can't, or price shouldn't reverse or retrace after a consolidation, right? So consolidation should go into an expansion, shouldn't go into a reversal or a retracement. And if it does, then that's manipulation. So this is a forced move up. And we are on this time frame. You can see here, there's a tiny fair value gap here. You see what price is doing. So that's the hiccup here. You want to see if price is going. It ran this high. Pretty much the bodies stayed below the consequent encroachment of this bearish fair value gap, which served as resistance here and serves as resistance here. Retrace into it here, stay below the midpoint, and then dropped. So that's good money, right? It's a good trade there. Good reason to continue short. Here, market opens 9:30. and this continues lower. Got a retracement here. So I like down close candles. Most of the time I'm not gonna call out an order block or whatever. I'm gonna call out the down close candle that's been violated. That's my thing. I like those. So anyway, bomb. Got another consolidation. Dropped again. So you kind of like treat it here like, oh, this is the high time frame draw. It's a 4-hour bullish fair value gap. And yeah, I don't even know what this black line is. I don't even know that off. What is that? I have that black line on the chart. I was thinking that earlier. What is this black line? All right, it's the top of this. Yeah. The top of this bearish fair value gap. Anyway. It's just there. I'm not a thing at this point. All right, so this could have worked on either time frame, 15-minute or the 5-minute was Lara based on the market maker sell model, or the completion of the buy side of the curve, and then the start of the sell side of the curve. Right. It's the half. So this is the buy side of the curve. This is the sell side of the curve. Then you kind of use these levels over here. So it's rebalancing all of this bullish move. And it's Thursday, high probability of a reversal. So you see here, like, oh, it's consolidation. This is a false move lower because this is bullish order flow. Consolidation, false move lower because price shouldn't retrace or have a reversal after a consolidation. So that's why it justified this as a created relative equal lows as well. And then price ran up, taking out these relative equal highs in the Asia high, then dropped. Literally dropped. It dropped below this consolidation, then retested the consolidation. So that's another thing. But whatever. Well, I'm gonna get out of here. I appreciate you guys tuning in. I'm really, the art of trading is getting more and more excited. More and more clearer vision, better management of risk, better accountability, and let's get it, man. Let's get it, right? Let's get it. Eat what you kill.